Well, good afternoon, everybody. Today is Wednesday, the 13th of October, 2010, and we are now live here. So let's go ahead and take a look at this market. The S&P 500 did finish up above the flash crash recovery highs and the close from that day. So that's important from a psychological standpoint, but we've also seen a real nice rally. The fact is the market remains in a healthy uptrend here. It is innocent till proven guilty, and we've got what's been pretty broad participation as well. Today we had seen 2,296 advancers and 723 decliners, so it was broad participation. It did get a little bit shaky at the end of the day and closed below the volume weighted average price, but from where we opened, we gapped higher and then reclaimed that volume weighted average price quickly, and then it was a strong session right up to testing daily R2 a couple times, and we continue to hold the important levels of support, and that continues to be the focus that we should have here, is that the market is in an uptrend, and it might seem like it's up too much, or that it's touching certain levels or showing divergences on short-term time frames and that sort of thing. It's been showing divergences the whole way up. And prices continue to march higher. So, excuse me, on the 10-minute time frame, we had seen yesterday that 117 level was broken late in the day. That should now be our near-term first level of more important support, and probably down near about 117.50 as well, 117.45 from this gap. So 117.45 and 117 below that, and after that, the bigger level is really this 115.20 area. But again, higher highs and higher lows. You got to look at this weekly time frame, and we've been observing for quite a while this inverted head and shoulders pattern, and again, I still think that it's possible that we could run up to the height of that pattern, which would measure out to 125. Again, we just take the height of that and add it to the breakout point. It would measure up towards about 125, and it's possible that that's where this market is headed, but I wouldn't count on it, and I wouldn't use that as anything other than an interesting level where the market has the potential to go. And if you take a look at the highs that we've seen this year up near about 122.25, then that would be obviously a bigger level. But we are battling with this next important level, which was support back in what was that, April, I guess. So that prior support now holding as a little bit of resistance. I mean, very short term, obviously, but the higher highs and higher lows are what matters most here, and we're seeing it in the Nasdaq as well. Last week I had said, maybe is this going to be from a failed move comes a fast move, and it definitely wasn't. It was a possibility, but we had a brief dip down through the 5-day moving average yesterday, a quick recovery, and more highs in here today. So the market, in spite of the weakness in the semiconductors, I think that's pretty impressive for the Nasdaq overall. The semiconductors have had a real nice rally and are up to this prior level where we've seen quite a bit of resistance this year. So maybe getting a little bit further resistance in this area would be something we do see. But maybe more of a time correction is what's ahead. Again, the semiconductors I think held up pretty good considering what we saw in Intel. And I got to turn this stupid chat thing off; it's making too much noise. Anyways, 28 and a dime or so is probably 28.15 is the important level for the semiconductors. If we break aggressively below that tomorrow, then I would think maybe that we're going to see a little bit further profit taking. But until it does that, it's just an area to watch. The financials got up to the high end of the range again. They were up near that 150 in the 200-day moving average. But the bigger thing is just breaking past the resistance, not necessarily the moving averages. But we've got that 1508 area that basically we've got a rising 10, 20, and 50-day moving average now. the market held up, I thought, pretty well with the J.P. Morgan earnings, and the bigger number to continue to watch in here that was tested yesterday, in fact, is $14.60. But right now we see that what we want to have hold is probably about the $14.80 level. So if we can hold $14.80 through the rest of the week, I think that's a pretty constructive action for the financials, and would likely, someone asked me yesterday, if I had to make a call, what would it be? And I said if I had to make a call, then I would guess higher. Again, news and surprises tend to follow the direction of the trend, and the primary trend of the market is higher. You look at the recovery in the IYR. We had looked a couple 3 weeks ago at this as from this failed breakout, we had a pretty quick lower, but down to the 50-day moving average, and now the IYR has recovered fully. And I guess that wasn't a closing high today. We had a closing high here of 55.21. So today was 55.25. It was a closing high for the year, and still a real nice, healthy pattern on the weekly time frame in the IYR. So we get these. What it seems is happening in this market is we're getting a lot of little reasons to be concerned, but prices continue to hold up. So again, you can look at all the warning signs you want. You can look at tick, trend, volatility index, Bollinger Bands, sunspots, lunar cycles, and that sort of thing, but the only thing that ends up paying us is price, and price action does continue to be healthy. People have been calling, last week they were calling this day the top in gold. Well, a lot of people getting squeezed higher in gold. Is that trend, still holding a rising 10, 20, 50-day moving average, even the 5-day moving average, it's still holding. So it's really a fool's game to try and pick a top when you have such a strong trend higher. The dollar index obviously continues lower as well. That's at a new low, as does natural gas, which bounced a little bit today, but just one of the worst trends in ETF history, I think. Besides, what were those one? There were a couple that actually went out of business. I forget what they were. Maybe some of the levered funds, but. Anyways, so we're in an uptrend. There's a lot of opportunity. There's a lot of stocks that are experiencing strong rallies and groups. We've got the oil service group is rallying nicely here. We've got that IYR, like I said, up at highs. Even the home builders look like they're banging away at resistance. And you get the home builders and the financials to break out. If they can hold those breakouts, then I think you're going to see continued strength through the rest of the quarter here, the rest of the year. That's a long ways off to say the rest of the year. We've still got 2.5 months. But the action's bullish, so that's what we need to focus on. Some of the solar stocks seem to kind of have maybe gotten a little bit tired in here, but there's still some opportunity in there with stocks like Yingli, LDK, had a great day today, JASO. Last week I was talking about Satcon and how I thought getting above the 393 level would be good for it, but man, this has just been a stupid little stock here, this SATC. It got above that 393 on where is it, on Tuesday or Monday rather, and looked like it was going to be a nice rally, then just got slammed. It got hit hard at the end of the day yesterday, but it is grinding higher, and it still looks like it's probably a $5 stock. We've seen some pretty junky type solar plays rallying in here, ASTI, DSTI, ESLR, and a lot of times when Hoku, when this kind of the bottom of the barrel stocks in a sector, when they begin to rally, it means that we're probably getting close to a near-term turning point for that group at least. So let's take a look at the stocks that you guys want to look at. Thanks, Andy, for the retweet. Could you please take a look at Qualcomm for Barfirm? Let's take a look at QCOM, QCOM, and Qualcomm is in a nice uptrend. It's got these, it's broken here on the daily time frame past this resistance at the 43.5 level. That resistance is held as support. What we've been seeing a lot with individual stocks is that the 10-day moving average has been holding as support, and then we're not getting a pullback to the 20-day moving average, but we're correcting through time, waiting for that 20-day moving average. It touches the 20-day moving average and then begins to move higher again. So on a 30-minute time frame, you can see it broke a little bit of resistance here at 45 today. I would think that you would want to set a stop underneath whichever one of these higher lows you're comfortable with. But but Qualcomm looks like it had broken an important level on that daily time frame. We're getting into this gap area, which I don't really care for, but maybe it goes to close this gap on Qualcomm. But it's a pretty volatile stock overall. But you got to look at it and say the buyers are in control. You give it the benefit of the doubt. How about a look at EMKR for Daniel? And EMKR is another one of these garbage stocks in the solar group. It's actually trades with 4 decimal spots, so I'm not going to take a look at it because that means it's either bulletin board or pink sheet, and I don't look at those. So Wild Trades wants me to take a look at Squinum. SQNM has been kind of a stock that really has been in a decent uptrend after breaking some resistance, but it just doesn't seem to get going in here. And I was talking about this for subscribers back in this area over here. We had a decent little trade out of it, but kind of like Qualcomm, where we see those gaps lower, it tells me there's some perceived problem with this company, and in particular when you get a biotech stock that gaps down like that, they're just really difficult to trust again. However, if you like this stock, I think that probably breaking back up beyond this high here at about $7.11, that you could maybe get a trade out of it with a stop near $6.95. I personally kind of just stop following the stock because it has this gap. So it's just not a stock that I'm taking a look at or taking seriously, I suppose, right now. Can I take a look at JASO? And yeah, JASO has been a huge mover to the upside. It's still in a great uptrend. As I've said last week, I think that SOL is kind of offering the blueprint on the weekly time frame for what we can expect from JASO. So JASO is it's in a great uptrend. There's really not a lot to say about it. It's higher highs and higher lows. Raise your stops up underneath the higher low that makes most sense to you. Maybe it's way down here at $8.20, but it certainly looks like that the buyers retain control and that the stock should be heading up first beyond this $10 level, and if it can clear that, then I think you've got probably a 12.5 or so dollar stock. Last one we'll take a look at is for Samurai Trader, and that is OREX, which I believe is a little biotech stock. It's $6.50 a share. The weekly time frame doesn't look too inspiring. I mean, it broke a downtrend here, and now we're getting up to this bigger level. So we've got this bigger potential level of resistance that it's kind of been trying to pound away at it at the $7 level. So, I mean, it's got a decent pattern, though. Nice little pullback in there on lighter volume after this rally. So I think the upside is limited, but it looks decent with a stop below about six and a dime. Then you probably ought to be do okay with shares of OREX. So looks like that's the last one here that I see, and that will do it. Thanks for tuning in, and I will talk to you again soon on StockTwits TV.